Good morning traders, Andy Demi here. Hope you're having a great morning, hope you're well, and getting ready for the weekend. So today I want to speak about a great quote by Seykota, who was a great trader, and you can read his story in Market Wizards, and he's got his own books. But he said that trying to prove basically to the market that you're right can be a very expensive lesson. And I really want you to think about that quote, because this is often the small detail, the small difference between professionals and losing traders. So if you're somebody who's not making money yet in trading, you're probably thinking, maybe professionals know a lot more than me, they have better strategies than me, they have better information than me, and that's why they make more money than me, or that's why they make money and I don't. Well, part of that might be true, okay, because obviously as you grow as a trader and over the years and experience, you do learn more things, okay, but more things doesn't necessarily mean more success. Now, what does he mean by that quote? What's my interpretation? Well, essentially speaking, one of the key things about a professional trader is the ability to know when they're wrong and accept it. Because, we cannot win 100% of the time. That is a fact. Okay, there's no trader in this world that can win 100% of the time. And I recently got asked, Andy, why don't you post one or two of your trades to prove that you can trade? Well, I don't think that's the right question, to be quite honest, because one or two trades, I may get it wrong. So does that make me a bad trader? No, of course not. In fact, you could be an average trader, but have really good control of money management, risk management, and knowing when you're wrong and cutting your losses and still make money. So it's not about that. The key thing here is not whether you understand strategy. The key thing here is when you're wrong on a trade, what do? How do you react? Like, do you increase your stop and then make a loss, a much bigger loss? Because nobody wants to be wrong, okay? Nobody does. But it's part of the game. Like, if you kind of get that stop before you even place a trade, you're going to be wrong sometimes. And it doesn't matter how good the trade looks. Believe me, I've found some amazing trades that didn't work out. Okay, because yes, let's say for example we find a trade where probability is super high, but it's not 100%, is it? It could be very, very high. So we've got all these confluences, we've got all these different, it's on the Fibonacci, it's on the trend line, it's on the support and resistance. Oh, this is definitely going up. But is that 100% going up? Are we going to risk our account on that? No, we shouldn't. We should put the appropriate risk and treat it like any other trade. Okay, so you've got to calm down on your emotions. Now, there are things you can put in your plan. For example, when probability is higher and it's quantifiably higher, you could, pre-plan placing a slightly bigger risk on those types of trades. But you've still got to understand that it could fail, and you don't want to make a loss into a big loss that you can't recover from. So what I find is what professional traders do really well is, of course, they take calculated risks, but when they know they're wrong or they feel they're wrong, they cut the trade or they let the stop get hit, and then they re-look at things objectively, and then they go again. And in fact, one of the things, when I was a really, really active day trader, which I'm not so much anymore, but when I was a really active day trader, sometimes if I was in a position and I didn't really know what was going on, like maybe I couldn't think properly. So I was in a trade and I thought it was going to do something, and then I wasn't sure because it wasn't acting the right way, and then I couldn't figure it out, right? Let's say, I was playing a price action trade. I would close the trade out. I would close the trade out to remove that emotion, because I was trading very large size, and I couldn't think properly whilst I was in the trade. So I'd close the trade out, don't worry about paying the spread again, and then I'd reassess it and I'd go, okay, now I can relax. I can just look at this objectively and then see if this is actually a good trade. And then I would sometimes just place the same trade again. And it may sound crazy, but it works, because once emotion is involved, it's very hard to think properly. So that's why it's better sometimes cut your loss. Okay, in fact, always better cut your loss where you within your rules, and then reassess, and then you can always get back into the market. The cost of transaction, especially if you're doing FX, is really minimal. So you don't need to worry about paying spreads and things like that, because it's not going to have such a big impact on you. Okay, so that's all for today, guys. Wish you a great weekend, and I'll be with you next week. Take care, and see you soon. Take care. Bye bye.